Okay, now I'm going to do a top-down analysis for USD JPY, US dollar versus Japanese yen. Okay, now I'm going to start from the weekly time frame. So first, I'm going to take my tools, find my trend lines or my support and resistance if there's any. But at this moment, what I see is market creating this triangle, of which it has been broken already. You can see that price has broke that triangle, of which we're expecting the move to the upside, right? At the same time, this triangle, it still appears in this formation also, which gives us more like a falling wedge, but it is a triangle, and either way it has been broken already. So which means now we're expecting a move to the upside. So our overall trend is bullish, right? Now I'm going to go down to the 1 hour to the daily time frame. As we go down to the daily time frame, if we try and see what price was doing before, you can see that from here, from this point to that point, I'm just going to change the color for this so that it can be visible and be a bit unique. Okay, just going to pick any color. So as you can see here on the market, we had this formation here. We have this rising wedge which was broken, and price continued to push to the downside. As price continues to push, and this was a 90 and it gave us this was a 90% rule trade. As you can see, it went back to where it started. And anyway, after the price has broken that wedge, what did it create? It created a channel to the downside, right? Of which can be seen as another wedge, right? Now, as you know, our anticipations or our expectations are, we look at the third touch, and that is where we want to see the market push further. So as you can see, we had our first touch, second touch, and our third touch, right? Our third touch gave us the 90% rule or 90% trade rule, which went back to where everything started, right? Now this chart pattern, it broke, went up, and now what are we expecting? So because it didn't only break the inside pattern, it also broke our overall pattern, which is on the weekly time frame. So because it's broken, what are we expecting? We're expecting price to continue to move to the upside, right? As we are expecting price to continue to move to the upside, what do we have to do at the moment? We need to look at what price is doing. So we do that by trying to find the market structure. And when we find the market structure gives us what? It gives us more trading patterns. And as these patterns are being created, there's always a pattern inside a pattern inside a pattern inside a pattern, going down to the lower time frame. That's why we start from the higher time frame, see what we have on the higher time frame, so that we can have a bigger picture, and we dive into that picture to see other smaller pictures, and dive into those small pictures to see other small pictures, in order for us to find our perfect trade. Now, what are we doing now? We're on the daily time frame, so we're going to dive down to the 4-hour time frame. As we dive down to the 4-hour time frame, you can see that the market has broke from that level, from this level. It continued pushing to the upside. As you can see, it continued pushing to the upside, waving up, right? As it was waving up, if you see this place here, right, this place has not yet been traded been traded before. What do I mean about that? I mean there's a fair value gap here. Now this fair value gap will have to be filled up somewhere in the future. It might be soon, it might be later, but at this moment, because price has just broken our overall structure, we're expecting price to move to the downside before it continues going up, right? So in this way, that means we can expect price to come and fill up the gap before it continues going up, or price can just decide to come just down here and continue to go down. But in this manner, because we have that fair value gap, it's fair to look at price from here and say it might push to the downside before going up. So at this moment, we are going to look for the lower structure on the 4-hour time frame. What do we have on the 4-hour time frame? Now let's draw our trend lines to find the structure, right? So as we draw our trend lines, you can see from this level to this level, there's a small channel in there, right? If we move our trend line to that side, you can see this is what is happening, right? Price is moving in a channel going up. So what are we expecting at this moment? We're expecting price to move to the downside. Now, where is price most likely to go? Price is most likely to go back to this level. And why do we say that? Because we have a fair value gap here. So we expect price to move to the downside before it continues going down. And another reason is because we have a channel that has just started, but we are not yet 100% sure whether this channel is going to go up in this manner. So this channel might be going up in this manner, we don't know that, or it might be going up in this manner, right? But what is the market structure telling us? The market structure at this moment is telling us that the price will first continue going down before it goes up, right? Now, the question is, how will price go down, or how will price get there, right? In order to know that, we need to dive down to the lower time frame. Now, okay, we can continue to the lower time frame. I'm going to go to the 1-hour time frame. Now, before we go there, we need to understand how price is moving, right? Now, inside this channel, you can see that price here created a pattern. From this pattern, price broke from that pattern, and then it continued going up, right? It's important to understand how price is moving, and because that will give us a clue of how price will continue to move, right? So you can see it created a channel. It created a channel here, broke the channel. So this was a correction move, impulse move. Now remember, price moves in two phases: correction, impulse, correction, impulse, correction, impulse. So it's only correction, impulse, right? And sometimes, okay, it will not be perfect. You always have to know that when you're trading forex, just know you need to know how to trade the market ugly. Okay, now here, as you can see, we had a correction move, and then we had an impulse move, right? And then we had another correction, and then if we zoom in, we need to first find out how price got there to know how price will move to the next step. So as you can see, price created a pattern there. From that pattern, it broke out to the upside, right? Now, as price continued going up, it was failing to create more structure above this high, right? As you can see, it was just rejecting the level. It failed to create more structure above this high. Okay, now let's see what price is doing here. Now from this level, you can see that price is doing that, right? At this moment, we can see that price is moving to the downside like this. Right? And what are we expecting in this area? We're expecting two things. We're expecting price to continue to move to the upside before it drops, right? Or we are expecting price to first break this level and continue to the downside. Now, remember, your structures are not always does not have to always be perfect, right? Now, the question is, when can we enter? We can enter when price break this level, or we can dive down to the 15 minutes time frame to see how price is behaving before we can decide. Now, we know that the overall trend is up trend, right? And then at the same time, we're expecting price to push to the downside before it continues going down. Now, we're expecting price to move to the downside before it continues going to the upside, right? Now, for us to know how price will get there or what we can do at this moment, whether we can wait for price to break to the downside and start selling, or break to the upside and continue buying, or we have to wait. So let's go to the lower time frame and see what the market is giving us down there. Now, as you can see, it is very, very ugly down here. It is very ugly down here. Very ugly. But you need to know how to trade the market ugly. And another tip that you can use is to just go to the line chart in order for you to see how price is behaving properly. And as you can see, this is what is happening. So remember, third touch is always our target. So 1, 2, 3. What are we expecting? 90% rule. Where is the 90% rule going? 90% rule is going to this level, right? 90% rule is going to that level, right? So we can expect price to first move to the upside before it drops down to this level here. Before it drops down to this level. Or if the 90% rule trade is disrespected, then we will expect price to push to the downside. But how are we going to know whether price is moving to the downside or price is moving to the upside? Okay, this is what we can do. Let's move a bit up so that we can define what is happening. So in this area, we can see there's a level in this area. So if that level gets broken, then we're expecting price to push further down, right? If that level does not get broken, then we are expecting price to push to the upside. In this case, what do? We wait, right? We wait for the market to do whatever it needs to do. So in this area at the moment, what I'm seeing is just price in the middle. So I cannot do anything. I cannot trade it because there's nothing that I can see or any confirmation that is giving me a trade, unless if you want to just jump into the market blindly and sell, but that would be very risky. So it's better to wait for the market to break to the upside or break to the downside before you can continue taking your trades. And that is all for the USD JPY, guys. I hope you enjoyed the video. I hope you learn a lot, and see you in the next video.